kick off with Kenya Power's full year results. Those have just been released. I don't know if you've had much chance to go through them, but just looking at the top line numbers and bottom line numbers, really, an 11% increase there in pre-tax profit to 6.26 billion shillings. Electricity sales rose 8.6% during this period. What is your reaction to the numbers?
I mean, as you said, the numbers came through this morning, so I haven't had too much time to go through the details. But the bottom line was more or less in line with what management expected. Last year in December, when they were raising capital, they estimated that they'd do 4.23 billion, which is slightly above what they did, 4.22 billion. But I think in line that the margins were slightly better than the previous year. There must have been operational efficiencies. I think that they had a bit of a stalemate with their employees over the year, with the different unions coming in and demanding higher rates. I think that the negotiations must have gone on well, because they didn't hire many new employees, nor did they increase the staff rates by a huge margin to actually cover for the inflation. So I think overall, in line with what management expected, and of course the margins were much better. But I guess as we get more information on this, we'll be able to relay this later on.
And of course, you have a buy recommendation on the stock.
Yes, we do.
Yeah. Let's move on to the banking sector. A Kenyan member of parliament proposing a bill to regulate bank lending and deposit rates. Now, banks are currently charging rates as high as 22% on loans, offering an average of 1.37% on deposits. So still a huge spread between lending and deposit rates. What is the likely reaction from banks to this new bill?
I think the thing is to look at this from two angles. I think the first angle is the Kenyan market, in as much as there are many players in terms of 44 banks that are operational, the penetration rate in Kenya is very low. It's less than 50%. So there's definitely a lot of headroom for accessibility of credit to remain a key factor as opposed to affordability of credit. Secondly, I think in as much as the margins are pretty high, and again compared to the regions, the net interest margins for Kenyan banks surpass what you'd ever see in Rwanda, Tanzania, Uganda, even Zambia. And I think what will happen is most of the banks that get most of their financing from the wholesale, which is the more expensive kind of funding, will be the first culprits. And I think this will be beneficial for those banks that are actually focusing more on volume as opposed to the cost of that funding.
With inflation, though, above 17% and, restricting the amount that depositors can earn on interest, surely, this would make a Kenyan market less attractive versus the likes of Nigeria.
In one way, yes, but I guess it's also important to understand the different operational dynamics for Nigeria against Kenya. Kenya is more into retail. I think since the inception of Equity Bank, in terms of looking at the retail market as a profitable market. The Nigerian corporates, the Nigerian banks are mostly focused on corporate banking, and they largely get deposits, which are very cheap from the government, essentially from the sale of fuel in that country. So I think if you look at the dynamics, they're very different, and the margins in Kenya are actually very profitable compared to the Nigerian banks. They don't actually have to compete extensively for this cheap deposits. In Kenya, again, the retail banking sector has proven to be very profitable, and there still remains a lot of headroom in terms of accessibility of this credit. And the argument now, I think it's more of accessibility of that credit as opposed to affordability. But eventually, the affordability of that credit then becomes a criteria to be able to look at into getting that kind of credit.
This is not the first time that Kenya is proposing a bill or a law to regulate bank rates. A bill in 2001 ended in failure. That was known as the Donde Bill. Is it likely to be passed this time around?
I wish I was a member of parliament, then I wouldn't be seated here, so I can't definitely answer that question on their behalf.
Okay, we'll move on to the telecom sector then. You got a buy rating on Safaricom, a hold rating on Access Kenya. Now, Access Kenya touching an all-time low yesterday of 475 shillings, settling at around 485 at the end of the day. Now, the government looking at allowing foreign participants into the market to access the 4G network. How is this likely to impact the likes of Safaricom and Access?
I think what's been at contention here is the 4G license, in as much as the government is allowing for competitors. But I think to date, Safaricom is still ahead of the curve in terms of comparing to its local competition. And Access Kenya has also been putting up its own fiber network and cabling network to be able to participate in a different segment of the same industry. I think it depends on whether these foreign companies actually want to participate with the local companies. If they're looking for local participants, then Access Kenya would probably be a likely candidate. I would not be able to comment on the views of management, but I think it's a situation that's actually out there, and I think for us the holding on the Access Kenya company and the buy on the Safaricom company is more geared towards operational sustainability over the next 12 months, as opposed to the speculation of who will be able to get the 4G license in Kenya.
Mbithe, I know that you look at markets in the East African region as a whole, beyond the Kenyan borders. Where are you seeing opportunities at this point in time? Any stocks that are offering a good entry point at this time?
I think the local banks are beginning to look very attractive, especially given the KES to the dollar rate that we saw yesterday. The Kenya shilling is actually becoming much stronger as the days go by, which actually now acts as an impetus to start looking at the valuations on the stock exchange. I think what we've actually been seeing is a lot of demand on the counters such as Equity Bank, which I think will continue to sustain. I think Kenya Power, with the financials that are just out in line with what management expected, could actually be a bolster to that. And on top of that, the company has actually offered a bonus issue on top of a final dividend that they've declared. I think KCB, we've been seeing net sellers of that stock, and I suppose this has actually been driven by the pricing of the funding, given that it's half corporate and half retail. So I think in general we'll see a lot of interest on the banking stocks and defensive plays such as Kenya Power.